watching episode 55 of the Tax Smart Daily, a daily video series for real estate investors to learn how to be tax smart.
Before we get started, make sure to subscribe to our YouTube channel and click the bell icon to receive notifications about future videos that we release.
Thanks for tuning in to today's episode of the Tax Smart Daily. I'm Brandon Hall, a CPA and managing partner at the Real Estate CPA. And before we get started, I invite you to join our Tax Smart Facebook group. Link to that is in the description below. We're having a lot of really fun conversations in the group, learning about taxes, learning about accounting. So I invite you to come in and take part of the fun. Today's topic is actually coming out of a question from one of our prior YouTube videos. The question is, can you talk about using a vehicle in your short-term rental? And I certainly can. So first, let's talk about when I purchase a vehicle for business use, what options do I have? First, if you purchase a vehicle for business use and you have more than a 50% business use of that vehicle, meaning that if I drive 10,000 miles during the year, at least 5,001 miles are for business, then I'm going to be able to use Section 179 and bonus depreciation to deduct some amount of that cost. How much I deduct depends on what type of vehicle it is. If it's a heavy vehicle, meaning it's over 6,000 pounds, then I can deduct up to $25,000 using Section 179, and then I can use the rest all the way up to that business use percentage of 100% bonus depreciation. So if I buy a $100,000 vehicle and it's 100% business use, I get a $25,000 Section 179 deduction plus another $75,000 of bonus depreciation for a total $100,000 depreciation deduction. Now, if I have a lighter vehicle, less than 6,000 pounds, all that does just means that I'm more limited in what I can claim with Section 179 and bonus depreciation, actually pretty significantly limited. So make sure that you touch base with your tax advisor on what those limits are. And lastly, a Section 179 deduction cannot make your income go negative like bonus depreciation can. So if I have zero income and I buy a vehicle, then my Section 179 deduction won't actually create a business loss for me. I would have to use depreciation to create that business loss. The Section 179 deduction, or that piece of it, would just carry forward into some future year until I have business income. So a Section 179 deduction cannot make your business income go negative. Now, that's on purchasing a vehicle. When I'm using a vehicle for my business, I've got to track the date of the trips, how far each trip was, what the business purpose of the trip was. I need a business mile log that I'm tracking on an ongoing basis. A lot of our clients use spreadsheets. A lot of them use Mile IQ. Really, whatever is best for you to make sure that you're tracking your miles on an ongoing basis. That's going to help you justify the initial write-off of the purchase of the vehicle. It's also going to help you just take a standard mileage deduction or actual vehicle expenses, whichever way you end up going whenever you file your tax returns. Now, one more caveat: when you're purchasing a vehicle, it has to be new to you. It doesn't have to be a new vehicle, it just has to be new to you. Like, it could be a 10-year-old used vehicle. Maybe you buy a used truck for your business. Well, it's new to you, so you can qualify for the Section 179 and the bonus depreciation. If, however, you have a truck and you move it into a partnership that you are also a member of, it's not new to you, so you can't go and use Section 179 and bonus depreciation. So now that we kind of explained the groundwork there, let's circle back on the question: how do you use a vehicle in your short-term rental business? Well, first, you have to have enough vehicle travel to justify buying a vehicle for your short-term rental business. You may not have enough travel to justify buying a vehicle for your short-term rental business. And the IRS is really good at sniffing this stuff out. So they're going to be able to detect a phony mileage log relatively easily, especially if you don't have great notes on the business purpose of the trips. So first, you have to have enough short-term rentals to justify all the travel, buying a vehicle specifically for your short-term rental business. Again, we're aiming for at least more than half of the vehicle usage is for business usage, not personal usage. The second thing that you want to do, even if you don't buy a vehicle for your short-term rental business, you can use your regular vehicle for it. You just want to track those miles. So the biggest recommendation that I have to anybody watching this at this point is to load up a mileage log. Get that thing rocking and rolling. You can use Google spreadsheets because you can use it on your phone, or you can use Mile IQ. They kind of automate some of this stuff for you. Just start tracking your miles and you will increase the deductions that you are able to claim. One more thing, if your short-term rentals are far from where you are, we've talked in the past about how your travel time does not count towards real estate professional status or for material participation. So if my short-term rentals are 2, 3, 4 hours away and I'm traveling there relatively, you might think relatively frequently, but the IRS or tax court might say infrequently, 6 to 8 times a year, that time does not count towards real estate professional status or towards material participation, but it doesn't mean that it's not a business deductible trip. So just because it doesn't count as a material participation hour doesn't necessarily mean that it can't otherwise deduct the mileage cost associated with that trip. So thanks for watching today's video of the Tax Smart Daily. I hope that you enjoyed it. If you have any questions or if anything that I say resonated with you, drop me a comment below. I really enjoy engaging with the community. And check out all of our social media links that we have in the description below. We really appreciate you joining the larger part of our community.